Chahine, and he's a Marketfy Maven and the author of Create Income with Option Spreads, and he's probably lurking in the background right now.
What do you mean? I just said good morning.
No, there you are. It was just a little bit quiet in the background. What's going on, Nick?
What is going on? A whole bunch, man. It's a whole bunch that's going on, but nothing in the ticker tape, which is pretty
What
strange, right?
what is your take here on the S&P futures here today? We're trading up, but like we were breaking it down, looking the financials kind of look a little bit weak here this morning. We've got obviously oil's been under significant pressure here for the better part of a week. We had a bounce, nice bounce in the S&P futures off the lows here yesterday. Is that all this is? Is a bounce, or is there something more to it?
I think it's just a balance. I mean, we should have no reason. I agree with Joel earlier today. I mean, we are range bound, although we do have support and we do have resistance. And now the resistance slid a little bit down lower. But we do need a reason to rally, do we not? I mean, we still have the problem. We got the no vote. Yet, the good news is that we shrugged off the no vote yesterday by rejecting the overnight lows from Sunday night, and even better way in the morning, and even better way at the open and thereafter. So basically, that tells me that in order for us to get capitulation downside, we need the, quote, Grexit headline. I mean, anything short of that is just the temporary dips that will probably get bought. Last week I said that I don't see the vote going our way, the Bulls' way. But I do take solace in the fact that everybody's seeing this accident unfold days ahead. So they all put their seatbelts on. They bought puts. They bought calls in the VIX. So they're all prepared. So they're not prepared to sell their profits yet because they think they have enough protection for the short term. That's why I think we need a giant, scary headline before we get capitulation downwards. And we may not get it. They may find a way to kick the can. So this morning's exuberance, I think, is misplaced because I think on the table is not a solution today. On the table is how, when, or what are we going to sit down and talk about. It's not even they're not discussing numbers, I don't believe, today. So I don't know why they were buying it up to 2078 on the ES. But there is no reason to sell hard from here unless we get another bad headline.
All right, so let's move on to some individual issues here, and we're just gonna get it out of the way here. Apple's just going nowhere here. Is it just a tug of war? No one wants to short it. No one wants to buy it. I mean, I look at this thing. It seems like it's always 125, 126. Are we just going to be in this holding pattern until earnings?
I think that's good news for Apple because it needed to play the sanity role and played the leadership role in at times when markets were falling apart. It had chances to fall apart, but it didn't. And have it being range bound is good. Meaning it's not an anchor. It's a heavyweight, so it's kind of playing the leadership role by not falling apart, I guess, when everything threatened to fall apart. So at times where the indices were teetering on breakdown or breakout, or breakdown or bounce, Apple bounced in order to help them bounce. So I'm pretty happy with the price action in Apple from the standpoint of holding in the face of adversity, if you want to look at it that way. It does have resistance from 28 on up, 128 higher. It does have support for 25 lower. So it is in neutral territory. So I wouldn't chase pops in Apple unless we have a solution for the markets, and that pretty much goes for everything these days. And you guys were talking about the shack.
Before you move on to
Yeah,
the shack, Nick, I just got
yeah.
another question for you on Apple, and this is a general question in the overall market here with regards to weekly options. Do you think that the interest as it continues to climb in the weekly options reduces the overall volatility of the underlying issues? I mean, you have so many people playing these weeklies all the time, and you know how those weekly strikes can, act like magnets there. Do you think that reduces the underlying volatility of the issue when there's so much action in the weeklies?
Well, I'm not an expert on how the actual trading shifted from trading the actual underlying to just trading the options. I
Yeah.
haven't touched underlyings and I can't remember how long. So I think there's validity to your opinion there. But I'm not an expert. You got to ask for a market maker that they'll be able to tell you exactly how the trading pattern shifted from actually towards options versus trading the underlying itself. I do still believe there's all the funds out there, they're still trading the underlying. And what they use the options for is to ride out periods of uncertainty. And maybe just if they know they're going to unwind a trade or so, they'll buy a put or a call towards their trade action. If they're unwinding, they'll buy puts ahead of time. This way, they may be able to, if they're big enough, while they're unwinding, they may be able to profit on the put side and vice versa.
What were you going to say about Shake Shack?
Oh, I was going to say that I agree with, I think Joel said that 52-ish is an interesting point, 52 and a half. And I think 52-ish, 52 and a half is the actual target of the breakdown from the 72 area pattern. So maybe in the long term, like you said, it could get a squeeze. So I would think that after today, if you want to play a market bounce thing, maybe Shack will bounce with the market if the market bounces. So I agree with you. I wouldn't short it here because probably you'd be late and end up buying somebody else's profit. Shorting, you know what I mean?
Yeah.
Get a down day today, and then maybe a couple days in consolidation and a little bit seller exhaustion, and then maybe get a ride up on it. Go ahead, Nick.
I have to caution everybody about fundamentally nothing has changed. I keep saying that it's so boring, but it's so true. We are just trading headlines layered on top of sentiment. So until the headlines go away, I can't make any fundamental trade on anything because everything is market dependent. I mean, right. I could love the Shack and the markets are going to break down, then the Shack is going down too. So I'm not making any fundamental trades. I'm still trading the ranges. Iron condors is what I'm doing. If I do have a big position, I would protect it just temporary. You can rent insurance. You don't have to buy insurance. You can buy it and sell it as soon as the uncertainty is gone and lose a little bit of money on protection, but that's okay.
Dick, don't start being like me. If I think the market's going down, I get rid of every long in my portfolio, and it's just try and be stock dependent. But we got a really good question coming out of the chat here, and we've talked about stocks, how they behave before and after the split. Based on historical observations from Dennis and I, we were kind of wrong on the Apple. It had a different valuation, but here you come into Netflix here, and Import the Beast here. Mort the Beast wants to know: do you see Netflix going up after the split? Will people who couldn't afford it before hop in and shoot the stock up short term?
We talked about Netflix so many times. I do remember I saying it's going to 700 maybe that afternoon. It was a joke, but eventually got there, right? But, Netflix went up for a real reason as opposed to speculation. It had a story, its growth, international growth, and then they threw the word of China, and boom, it went up and up and away. So I can get behind a move up that's based on fundamentals. Whether it's too high, too fast, or I'd be buying somebody else's profit, I'm not sure as far as timing. It's not for me. I can't chase rallies. It's not in my personal nature. Investing has to fit your personality, and if you're not comfortable with it, then you shouldn't do it. So if you miss a few bucks on Netflix to see how it's going to behave for the next couple of months, what's wrong with that? If you're iffy about it, stay out of it. But technically, fundamentally, it shows global potential, and that's what people are buying. As far as psychologically, people chase splits, but after the split, I haven't done any studies, but I remember Apple split, it's doing pretty good. CRM split, I don't know if it's doing as well as Apple. So, and I think MasterCard. So you can look at ones that split and see how they behaved, and then evaluate the growth potential that these other guys had. So Apple had growth potential, and the split is really not meaningful in the long term. People chase it short term, but then you have to chase the stock based on its fundamentals.
It will start trading post-split here July 15th, so you can mark that date on your calendar here. I'll just say my own opinion is we had obviously the run up there ahead of, it's kind of like a buy on rumor, sell on news thing. You've had that. Now you've had 3 or 4 days of consolidation here where it's digesting the last sell-off here. I think if the stock could get back above like that 666 high that we made just on the first is 3 days ago, maybe there's some interest here ahead of the split, because sometimes you'll see these things make one more run here just because everybody wants to get ahead of the split. So I'd be scared to short it here, and I'd almost be interested in the long side just ahead of the split. I don't know about post-split what's going to happen, but...
So I agree with you, and I would be careful at the 635 level on the way down. If market's correct, it's not immune, Netflix.
For sure.
So 635, it's got a gooseneck hanging out there, so area.
It's
So I'd be
all about
careful.
having outs.
One
Yeah, exactly. Don't overstay your welcome in a profitable trade. That's what I learned the last couple of years.
one quick note on Netflix. Talked to Sean Udall time to time about different stocks, and he likes to analyze the numbers and the balance sheets, and according to his work, there's a lot of content costs that are kind of being kicked down the road and not showing up on the balance sheet. So yeah, they have the content for now, but what they're paying for the content, how they're going to maintain that content, is something that's going to come out further down the road. He has no interest in being long the stock based on that information.
That's something they brought up a long time ago. Off balance sheet debt and like promises, basically. So that is not a new concept,
Hmm.
but it is a valid concept. I don't know enough about it, so I'm just going by what the market is buying fundamentally as far as Netflix is concerned. And that's the story of growth. For Amazon, it used to be the actual growth, the growth pattern that they've had, which was insane for a long time. And then one day they decided, no more, we want to see profitability. And then they punished them for a couple of periods. And now they're back loving them again. So same with Netflix. For a little bit, they sold them hard because, hey, we don't see growth. And then, hey, the growth came back. Story, that is.
All right, Nick, you're our Priceline expert here, and I know you were
Mhm.
hands off in the middle 1100 handle, and we're looking for 1100, and boy, he did that quick dip there. Were you nimble enough to get something off there when it dipped down, I believe, to 1103? You filled one of the gaps here. Are you still waiting to come back down, maybe get another shot at the $1,100 level, or it's just overall market environment just kind of saying, hey, I can sit back and wait and buy this thing at a lower price?
Yep, I do remember talking about Priceline. I do remember mentioning 1125 and 1100, and they both came about. I do like the company. It has exposure to Europe, and it's also obviously market dependent. So if the markets are fine, it'll be fine, and 1100 is something I would buy. I would buy it via selling puts, and I will probably hedge it via selling some calls. And Priceline is so high that you can do long-dated puts and calls on that bad boy and just profit very nicely without being in the face of trouble. I'll give you an example. The 870 put pays $10 if you sell it. I'm just saying. I'm not recommending anybody go buy it
Correct.
to sell puts, but you can find a spread down there that probably pays $1. So it'll return 10, 11% at $870. You got a good price buffer. Conversely, you can do one at 1,450 maybe for another $10. So you can probably get 20, 25% yield in 6 or 7 months without having to break a sweat.
Nick, what are your thoughts on crude? We've had a significant sell-off here in the last couple of weeks, coming down from $60. We're now back here at 52.40 trading this morning. It's basically been straight down for the last week. What are your thoughts here on crude? Where is it heading?
Well, crude is a headline move yesterday, right? And I think they just kicked the can another few days as far as the deadline on that deal. So I think the headline, even though they tried to price it yesterday with a huge drop, what was it, like 7%? They're not fully priced. The headline, if the headline resurfaces 3 or 4 days from now, then boom, it's going to get another hit. I'm saying that crude is a, pardon the pun, but it's intended, a rigged game until this whole shenanigan is done. So I can't. Who's to know? I mean, this is a level from before April that we're back at. We were just fighting for 60, 62, 63 just days ago, and now here we are at close to 50. So why should it stop before it hits 50 is what I'm saying. So all it takes is another negative headline, which is positive for a deal in Iran, I think would be negative pricing for crude because that'll bring a gush of crude onto the market, I believe. So until the rigged aspect of it, I mean, how can you're just gambling more than guessing. I
Nick,
mean, gambling more than investing, I should say.
Nick, I gotta hand it to you. You helped me out a little bit last week, and I was dabbling in the Alibaba calls, and they came down and they filled that gap. And what I was looking for a gap fill from here, and I was looking for a little bit of a pop, and I actually got it the next day. And I'm like, should I hold on to this one? And I just thinking, reverberating what Nick said here, and I said, well, you know what? You never go broke taking a profit, and I did. Now I'm getting itchy again here, trading under
Uh,
80 bucks, down 79. Nick, you still hands off on the Alibaba?
I am, and I see resistance for it at 82 for this week based on the open interest. But the problem with Alibaba is that it also carries the China tag. So
Okay.
if the Chinese markets are struggling, and they are, I mean, they're pulling out all the stops in China. Plus, technically, I don't like it from the standpoint is it's putting in lower highs and drifting lower, bouncing on the floorboard, which is around the $80. Well, how many times is that floorboard going to hold before it becomes a trap door? So if the board breaks, it's going to whoosh down even further, probably another $5 or so.
Ooh.
I'm not calling for it. But there are two likely scenarios here: the board breaks, or it provides a springboard effect or sort. So for that, you need the markets in general to rally and China to stabilize. So that's a lot going against you. So if I were to go Alibaba long, I would do it with long-dated calls, so give me time to be right, as opposed to trying to waste money on the weeklies. So I would go out in time, buy a call spread, and just forget about it if I believe that it's a good place to get in.
You got me buying puts in it now. Nick Chahine,
Yeah.
he's an option expert. He joins the show every Tuesday to discuss this week's options look. He's also a Marketfy Maven and the author of Create Income with Option Spreads. You should check chat out on marketfy.com. Nick, great input as usual. We'll talk to you next Tuesday.
Thank you, guys.
Thanks, Nick.